We're very pleased to announce record results for 2013 with record revenues, profits and earnings per share. Like-for-like revenues were up 11%, and we're very pleased in terms of our strategic development that we've met all three of our key performance indicators. Earnings per share were 9% up. Our visitors, which is one of our key internal key performance indicators, were up 8% against an industry average of 3%. And in terms of the geographical footprint of the business, we're now 75% emerging markets and the US. Our record results in 2013 were delivered by two key things. Firstly, the performance of our big exhibitions, and secondly, the performance of the emerging markets portfolio. In terms of the big events, the standouts were the Dubai Air Show, where revenues were up 25%. We had record customer orders, over $206 billion, and Label Expo Europe, where both visitors and revenues were up 11%. In the emerging markets, the Turkish business performed very strongly, notably Asansor, our big lift show, and Zuchex, our houseware shows. And in China, Hope, our business in the central part of China, performed strongly and has now doubled in size over the last 3 years. So overall, very pleased operationally with the business.
It's a really good set of results. We've got record revenues, profits and earnings, and it's a performance as a team we're very proud of. On the revenues, we have like-for-like growth of 11%, that's at constant currencies. We have the benefit of biennials and acquisitions, but underlying that, we've got that good organic growth. In terms of profitability, we've got increases in our margins, leading to increases in EPS. Turning to the balance sheet, we have a very good performance of generating cash from our operations, with cash conversion of 95%. Our gearing at the end of the year was 1.3 times net debt to EBITDA, and that, together with the placing we've done subsequent to the year end, means that we're in a really robust financial position. So overall, together, really good set of results.
In 2013, we've made a number of key strategic developments. Firstly, in expanding the business, we've really substantially completed our geographic exposure with a move into Indonesia last January, where we bought the infrastructure show. And in November, we moved into Mexico, where we acquired 50% of E.J. Krause's business. Overall, we have, in addition to that, made a number of strategic acquisitions, accelerating our medical business in the US with the leading cardiometabolic show acquisition, and also in China with the largest lingerie show in Asia. In terms of other areas of future growth, the management team have been very busy looking at taking their existing brands into new high-growth markets. In 2013, we launched 8 new shows. We've got 10 planned for 2014 and a further 8 for 2015. And this really demonstrates looking to add value to our existing shows, taking them to new jurisdictions and giving the customers exposure to higher growth areas from the markets they're currently in. World markets have started off with some volatility in 2014. But our business has got off to a good start. Our key performance indicator of forward bookings for the exhibitions are currently up 11% compared to last year. We're currently focused on continuing to develop the business organically and replicating our events, and we're very much focused on quickening the pace of the business.